Okay, good afternoon, everybody, and welcome to a special webinar that we're putting on for our Property Finance Friday newsletter. If you don't know me, my name's Chris Davidson. I'm the Managing Director of Discover and Invest Limited and Discover Development Finance. And I'm delighted to introduce and welcome Josh Riddett, who's the CEO of Easy Crypto Hunter, to this webinar. Thanks very much for joining us, Josh.
Yeah, no problem. No, pleasure to be here. Exciting stuff for the moment. So yeah, keen to get into it.
Indeed. Josh is going to discuss some of his hardware products, passive income that he generates for property investors. And I think before Josh starts, I'd like to just set the scene a little bit as to why we're doing this, because for some property investors, the crypto space and the property industry probably feel like quite a big leap as to what's going on, and to try and just link these two together, because I think that's important. You know, why should a property investor be interested in what's going on in the crypto space? So for me, it's become increasingly clear in the last year or two that the world and the business is getting digitized. So we've seen this year with the rise of Zoom, how business communication has got digitized, for example. We are seeing the digitization of money through Bitcoin over the last 10 years, and Josh will talk more about the blockchain technology. What some of you may or may not know is that digitization is happening with central banks and central bank digital currencies. So this is very relevant stuff, very mainstream stuff, possibly not being talked about as much as it could be. And that underlying technology, blockchain technology they are using, is coming from Bitcoin. So there is a real link into the digitization of money that's happening. On top of this, every industry is being disrupted, and it's really clear that the property industry will be disrupted, and there is a digitization that's happening in this industry. Some very good examples being the land registry have partnered with a large company called Consensus. So they have been doing pilot projects to digitize land title deeds. So that will change the time it takes for that to happen in a property transaction. There are also blockchain software solutions companies working with estate agents, and they're working with valuers to make valuations more accurate and to change the time on that. So just those two elements alone in the next 1, 2, 3, 4 years will drastically reduce the time it takes to transact a property. So this is going on in every industry. The digitization is going on in property. It may not seem as apparent right now, but in some of our newsletters, we've talked about a lot of these different areas. On top of that, back in March, some of you may know, when we had a bit of a pause, I did a course with London School of Economics looking into blockchain technology, and that only reinforced my belief that property and the blockchain technology and the digitization of the industry is coming. It's coming fast, and the quicker that property investors can start to understand what's going on and see different opportunities that are available as a result of this happening, the better it will be for all sorts of reasons, and particularly with Josh's product, the benefits of getting some passive income. I was looking for crypto companies in the UK around about April, May, and there really are very few at the moment. The UK, it's fair to say, is probably a bit behind, but Josh is one of the leading companies. Easy Crypto Hunter is one of the leading companies. It was very interesting to meet him, speak to him about how 80%, I believe, of your clients are property investors, landowners. So there's a real link here between the technology that comes from Bitcoin, how that's changing the industry, and how this is a product that you've got that could be very useful for property owners and property investors. So as a very brief analogy, I'd almost liken it to and you've mentioned in your videos, the Amazon data center, someone holding a data center and leasing that out to someone. This product that Josh will go into, think of the analogy of the Amazon data center and the income they generate from that. So that's just a bit of background. So Josh, thanks again for joining us, and perhaps if you could start us off with a bit of intro and what your product's about and how it's sort of come about with Bitcoin and blockchain.
Yeah, I mean, thanks very much for that, Chris. So, just I guess hello to everybody watching who's probably thinking, what the hell am I doing talking about crypto on my property little viewing here? But of course, Chris has done a good introduction to hopefully alleviate some of those concerns. But quite frankly, as Chris alluded to, I think it's about just a bit less, probably somewhere between 70-75% of my clients, both in the UK and overseas now, are property investors in one form or another. And very simply, it's because you guys watching this enjoy the element of passive income using the capital that you've got or you've leveraged or whatever so forth to be able to earn some money whilst in theory you're not doing a lot, although of course I'm sure as property investors you know that's not always the case. But cryptocurrency and blockchain and what we're going to talk about today, and particularly these little machines you can see behind me, you know, effectively what you're left with in practical terms is a machine, a posh computer that you plug into a normal internet connection, normal plug sockets, you turn it on, it runs 24 hours a day, and you get paid quite handsomely for doing so. So we're going to probably get into all the nuts and all the details, but the top and bottom of it is you're left with a device which is a passive income generation machine. And just the same way that you guys rent out land, warehouses, property, and other people pay you for the use of that space in 2020, as computer technology continues to move forward, and as Chris has alluded to, many different organizations are now using this blockchain technology. The same way the internet requires internet servers in order to make the internet web pages work, the blockchain requires blockchain servers, these little things behind me, in order to move around all the coins and transactions and so forth. And if you own those computers, you're able to get paid as a thank you for helping move the transactions around. So the people that pay us, or you if you were to own this equipment, are effectively just companies that would like to rent out our posh computer power to help their networks grow and to perform the work that needs to be done. So in a nutshell, it's not that much of a logical extension. Renting out a house, renting out posh computer power, you have an asset, other people want it, they pay you very handsomely for that. That is really the kind of, if you boil it all down to its simplest form, that's a great place to kind of start, and that will be a good kind of pin to start with as this conversation moves forward.
Okay. But so, and so essentially you are what is called mining cryptocurrency. So yes. I think again, for a lot of people that would be, you know, there seem to be all these different cryptocurrencies. Some have heard a bit of Bitcoin.
Yeah.
You know, what is a cryptocurrency and why do you need to mine it? What is the mining aspect to this cryptocurrency that has evolved?
Yeah, well, probably just before I jump into kind of what the mining is, it's probably a good understanding for, I guess, the people watching, you know, to kind of get an understanding of why I set up the business and what we did, kind of what we do here, because the business is a strange one in the fact that all of our clients, or the vast majority at least, are not cryptocurrency experts. You know, the average age of my clients is 58. This is not some young boys tech wizardry stuff. You don't need to be some computer programmer nerd. It's like I said, plug socket, internet connection, turn the thing on, and we'll kind of assist in the background. And what I quickly realized when I founded the company, you know, well over 3 years ago now, was that there's so many people out there that were starting to understand, as you've alluded to in the opening, how incredible this technology is, but it can be quite difficult to enter because you don't understand how things work or what's going on or the ups and downs. And, you know, many of us out there use the internet every day, but wouldn't have a dickens about how to set up an internet server. That was kind of where things were. So I realized that if we could take away all the technical restrictions for people and effectively promote the business as an investment opportunity akin to property investment, stock shares, renewable energy installations, those types of things, then that would make a very easy package for people. So we just wanted to make it nice and easy, offer a human service where there's offices and people to speak to, and obviously there's my team here who look after many clients all over the place. So it's just something that you can get into without needing to know all the crazy bits and bobs. But how it works is obviously the fundamental. So jumping into that first question, what is cryptocurrency? It's probably a good kind of point of order to understand why this came about. A lot of people have heard of Bitcoin now, but pretty much don't really know much more than that. So the best kind of approach to this is if we zip back to 2008 when we had the big financial crash. And what happened there, quite frankly, was, as we're all aware of, is that the banking system kind of did a couple of naughty things, and generally speaking, the average person lost faith in the banking system. So that led to the 2008, 2009 financial crash. And whilst all this was going on in 2009, a group of people got together and they thought it would be a really good idea to try to have a form of paying each other without a third party. So why do we need to trust the banks? Because they keep screwing stuff up. So the only way that at that point in time we could pay each other without the banks would be to stand next to each other and give each other cash. So what happens if someone's in another country, or, you know, as me and Chris, opposite ends of the country right now, I can't just give him a chunk of cash if we're not physically next to each other. So we have to rely on PayPal, Amazon Pay, NatWest, Santander, Barclays in order to transfer these funds. So we have to trust this third-party entity, and that's the basic premise. So a group of people got together and developed a new type of exchange, which now, 10 years later, is known as Bitcoin. And the whole premise of that is that it was a system where I can pay you directly, and there is no bank, there is no government, there is no third party, there is no organization that mandates the in-between of that payment. I can pay you directly, and no one and nothing can stop that. So in order for, you know, if we now, you know, so what is the purpose of a bank or a third party? Is to mandate that transaction, to kind of look after things in the middle. So if we're going to cut that person out, how do we know that I've not just made up fake coins? Or how do we know what the attributed value is? Or, you know, you get into this, how does it all work? So this is where, and the main thing we'll talk about today is, rather than Bitcoin, we need to go a little bit deeper. And what all of this is about is something called blockchain technology, which is the technology that was created in order to facilitate what we now call as Bitcoin. And in dead simple terms, it's just blocks of information that are all linked together via mathematical code. And in your head, think about it like a posh spreadsheet or like a Google Doc, where any record that gets put on that system is public for everybody to see. So if I was to send Chris 1 Bitcoin, and it would go from my wallet to his wallet, and it would be recorded on this posh spreadsheet. Now, the difference is with this posh spreadsheet, which is why it's really clever, is everybody can see the transaction. So therefore, all you guys watching, if I sent Chris 1 Bitcoin, you could check publicly that I had sent that money from one wallet to another wallet. Therefore, removing the ability for Chris to say, "Hey, Josh, you never paid me." So the
database is distributed in a sense, rather than one central database. Every computer that's running the Bitcoin network has the same database that's
exactly that. So what we have, and the reason why this is now becoming such a huge thing commercially, is that what we've done is we've moved away from centralized data systems where NatWest or Santander or whoever control the information in the middle, to now an open source platform where everybody can see and check and feel what is going on. So it removes the need for a third party, because now everybody can publicly check what's going on. So the trust is now in the public sphere. And what that means, when you boil all of this down to its rawest form, is blockchain technology is a new type of technology that digitizes human trust. And that's a big, big, big deal commercially, because the next extension of this is that Bitcoin was just a form of payment. But this same technology, the same blockchain technology can be used, this record, this spreadsheet that can be updated. And one thing to mention is that record can never be amended or changed. So it's a permanent record of information. What happens there is we can use different coins and tokens, as Chris alluded to in the beginning. There are now hundreds and if not thousands of different cryptocurrencies. But one thing people fail to understand is that, or rather not their fault, that they shouldn't really be called cryptocurrencies, because not all of these tokens are designed as forms of exchange. They can just be a token that represents an entirely different business activity. So the best way to kind of think about that is a little bit like the internet. So if you imagine the internet as the underlying technology, on top of that sits Amazon, eBay, Microsoft, Facebook, totally different companies performing totally different business services, but they all use the internet as a baseline technology. Similarly, blockchain in this instance is the cool underlying technology, this ability to have all the data on this spreadsheet that everyone can see, that everyone can verify. That's the cool underlying technology. And on top of that sit hundreds of different applications, Bitcoin simply just being one of them, which of course is a transfer of money. Now,
would you talk, rather than cryptocurrency, would you talk about them as say, crypto assets.
Yes.
And almost, I mean, they're not quite like shares, but would you liken them to shares in a business?
For the purpose of
in that business.
Yeah, for the purpose of logically explaining them, think of them more of digital. They should really be called crypto assets or crypto tokens. Yeah, so akin to what you would understand a share to be like. Yeah. So, for example, so practically speaking now, now people are starting to get a rough idea of how this works. Why is that such an important thing? So let's take an example that, people listening might be able to relate to. Why do we need estate agents? Like, the only reason they exist is to make sure person A does what person B says they're going to do. So what if we use blockchain technology? So all of a sudden, Josh, he wants to sell his house to Chris. So I can create Josh's house token. I can give that to Chris on the blockchain. Publicly, everyone can see that that's been transferred. He can give me the money on the blockchain. Publicly, everyone can see that's been transferred. There is no way that that can be amended in any legitimate fashion. So now, all of a sudden, we don't need an estate agent because the deeds can be transferred on this database system without the need for anyone to verify that because it's publicly verifiable. So ultimately, it removes the need for pretty much the vast majority of modern day third-party systems. So that's an example for property. Lots of companies are now using blockchain for property distribution. It can also be used for individual records of information. So another big market for my business is farmers who are looking at diversifying farm and land incomes. So we have farmers now that use the blockchain for cattle. So where who the calves' parents were, how much it cost to feed them, how long it's been alive for, what day it went to abattoir, which butchers it went to, what the sell-by date of that meat will be. All of those informations can be placed on the blockchain so that the consumer could maybe scan a QR code at the end of it and have a perfect record of all the information that ever happened with that food. So this goes into supply chain logistics for when your parcel came from China, when it arrived at the port, when it turned up at your door. And ultimately, this baseline technology of blockchain now, as you start to understand this, really does have somewhat limitless use cases, which is why all the big banks of the world are using this technology. IBM, Microsoft, Amazon, every company you can think of pretty much now has its own blockchain division because they're using this technology now to effectively save time, save money, save resources. The insurance sector is another really great example of this. So the example I always use is AXA. AXA Insurance have a flight compensation scheme. Obviously in the EU, if you miss your plane for 3 hours, you get compensation. But in order to claim that compensation, what do? You've got to call them up, email, haggle. 6 weeks later, you get a check in the post. But on the blockchain, the very second the plane's wheels don't leave on time at the 3rd hour, you instantaneously get paid. No human interaction. So it saves time, saves costs.
The ramifications are just enormous in that, and as you say, the big banks are taking this on because they see it's going to save a lot of money. It's going to save costs. It's going to save a lot of time. And in an era now where incomes are dropping due to the year of COVID, this arguably will accelerate what works in a recession is people who can provide a way to cut cost and cut time. So it's major. It's really happening on a big scale.
Yeah, there's just a lot of applications for it. So everybody talks about Bitcoin, and that's the kind of example that we all use because it's a bit more simple for people to get their head around. But what you mustn't fall into the trap of is thinking it's just about transferring money. It's really about the transfer of data on this blockchain. So, for example, the NHS is now looking at a token called Medic Chain, where you're able to put your NHS medical records on the blockchain. Therefore, you always have a perfect record of your medical records. So, God forbid, if I was down visiting Chris and had a horrible car accident around the corner from his house, I would be in a different NHS trust than up here in the Northwest where I currently am. So somebody has to get the records from one trust to another, which there's a time process involved in. Whereas if everything was on the blockchain and everything could be accessed in a centralized manner where no records could be changed, again, there's practical information with data transfer there as well. So once you start thinking about this, it just becomes very, very exciting stuff.
It's differentiating that. Bitcoin's kind of like your ground zero, day one position. And whilst it's it's an asset in its own right. It's also just the start of that history, that journey, and that's the blockchain has come from Bitcoin, and that's kind of the importance
Yes.
of why anyone who's in Bitcoin talks about it so much, that it, and why it's quite crucial to everything that goes forward with blockchain technology. Its position in history.
Yeah, I guess you could liken it to other things. You know, someone looked at a horse and went, "Oh, I reckon if I get on that, I can move faster." And then someone strapped a plow to the back and went, "Oh, that's useful too." You know, and then someone thought, "Oh, I'll race them for fun." You know, so once you understand the technology and it works quite well, people went, "Oh, this is a great way to transfer money." Well, is it a great way to transfer other informations? And, you know, 10 years later and a couple of $100 billion worth of market cap, we've now got everything from supply chain logistics, insurance protocols, energy transfers, property transfers, asset transfers, with literally new use cases coming on every other week.
Yeah. And the financial market, securitization of financial assets.
Yeah, tokens, assets, shares, stocks, houses. Yeah, massive.
Yeah, very interesting. So from there, and I will provide some resources. There's issues like the double spending problem, how Bitcoin solves that, and if you want to get into more depth of this, I think there's some good resources we'll provide. But from understanding cryptocurrency and that blockchain tech, how do you then take that forward with your products? How would you then talk about that?
Yeah, so it's real simple. So obviously we have this posh spreadsheet, this blockchain. So because there is no bank or government or Bitcoin company, so all of this runs on the ethos of decentralization. So for example, some skeptics out there go, "Oh, well, what if they just make Bitcoin illegal?" Nothing. Like the UK government, the American government, they do not control Bitcoin. It's not in the federal system. It's not in the British banking system. It's a completely external thing. You can't stop it. They have no physicality over the infrastructure. The only way Bitcoin would ever stop is if every single Bitcoin mining machine in the world simultaneously turned off, which is just not going to happen because it's Bitcoin mining machines in every country in the world. So what we've got is, there isn't a head figure. There isn't someone that could die that would, if Zuckerberg was to die, that's going to have some pretty big impacts on the share price of Facebook, I'd imagine. Whereas if a single person was to, get hit by a bus in Bitcoin, it makes absolutely zero difference. It's entirely decentralized. There's not a single point of weakness. And that's one of the big advantages. So this decentralization versus centralization is a big model. And that's kind of fixed into the ethos. So when it comes down to how these things work, when people might be listening to this and go, okay, kind of start to get it now. The pieces are joining together. Where the hell do these machines come into it? Well, in very simple terms, in that example of me talking to Chris about sending him the Bitcoin. So if I was to send Chris a Bitcoin from my address to his address, it needs to get kind of imprinted, kind of stamped, as it were, on this blockchain network. And the machines behind me are the devices that do that. So one of these devices would spin up, and it would communicate with every other machine in the world and go, is that coin real? Yes, it is. Is Chris's address real? Yes, it is. Is it going to move from here to here? Yes, it is. And it physically computes the move across and subsequently stamps that transaction is correct and valid. And it does that simultaneous with every other machine in the world. And as a thank you for providing that service to the network, you actually earn a little bit of coin as a service fee in simple terms. So again, you can kind of relate this to, again, the Amazon example that Chris started with. Let's say, it's Black Friday coming up at the time of filming this. Amazon are going to be selling a hell of a lot of toothbrushes, right? So their back-end data systems are just going to be absolutely stacked full of orders. So is it reasonable to assume Amazon is going to have increased its computer server power to handle data on its website? Absolutely it is. So what if Amazon didn't have any physical more computers? They'd ran out of warehouse space. They just didn't have any more. Well, it would make sense that they would rent more computer power. Now, rather than Amazon paying a data center in cash, imagine if they paid in Amazon stock. No one's really going to have a problem with that, because guess what? Amazon stock's great and you can sell it for cash in 5 minutes. That's exactly what we have here in the cryptocurrency world. These machines behind me are the Swiss Army knife of the blockchain world. They can mine any coin, provide computational power to any network out there that requires them. And ultimately what we do as a business is guide our clients to changed the machine to basically provide blockchain calculations for whichever business is paying us the most money. So be that the most shares they give us, or the value of their shares, or a combination of the two, to work out that that business over there is paying us more than that business. So we will mine. So cryptocurrency mining is basically just the name that's given to this updating of the blockchain and the stamping of these records. So every time you do that, you get paid. And obviously different companies pay you different amounts. And obviously those tokens that you earn, you don't get paid cash, you get paid in coins. So if you're updating the Ethereum network, you will be mining Ethereum and you get paid Ethereum as a thank you. So that could be Ravencoin or Zcoin or many of the other hundreds of coins that are out there to mine. And that's really all that we're doing here. Just renting out posh computer power to these networks that need the processes to be updated. And as a thank you, we receive some coin.
And those coins you can either hold for investment, or as you say, you can liquidate them very quickly on exchanges. Some coins are quicker than others, but
they're all virtually instantaneous. Yeah, I mean the smallest companies that we deal with are $250 million with millions of dollars of liquid daily volume. So another mistake people make. So these machines behind me, the machines which we sell as a business. We've used the example of Bitcoin because that makes sense to most people listening, but we actually do not mine Bitcoin. These machines are what are called altcoin mining machines. They mine all the other coins except Bitcoin. Bitcoin uses physically a different type of machine, which is a terrible value proposition for investors because it uses a special computer chip, and they just design a new chip, and you buy the best machine and it's out of date in 5 minutes. So that's one of the misconceptions that people commonly have with this sector, is that the technology moves on so quickly. That is not true for this type of equipment, but it is very much true for Bitcoin stuff, which is one of the main reasons why I don't operate in that sector.
Well, it's actually worth saying a little bit about the economics of Bitcoin mining, because people would say, oh, well, Bitcoin seems a major one, why wouldn't you do that? But actually as the consolidation, or sorry, the halvening that they call it, as getting rewards changes, actually the consolidation of mining pools worldwide means you actually have to be an enormous player to get anywhere near making Bitcoin mining worth your while. Is that fair to say?
Yeah, so again, it's probably worth taking a step back to the kind of wider economics of this. So again, if you remember back in 2008, when all this came about, it was designed from its ground up as an alternate system of finance to the modern day banking system. So again, without going too deep into everything, depending on how educated your listeners and viewers are on this, but probably quite so as property investors. But when it comes to the fractional reserve banking system, and the fact that as at the moment with Corona, governments around the world are just printing money willy-nilly, which ultimately is devaluing the value of the pound and the dollar at rates that we haven't really seen, or certainly won't have seen as the next months and years transpire. Bitcoin is fixed at 21 million coins that will ever exist. You cannot make more Bitcoin past 21 million. So ultimately, the way that this code was programmed, this blockchain was programmed, was that the more people that mine it, the more people that provide computer power to get it and help the network, over time, the less coins that come out, which subsequently then plays on the very basics of supply and demand. More people want the coins, it's harder to get them, and that's one of the main reasons why the price continues to increase to at the time of filming this, $19,000. We're close to all-time high prices again, which is incredible. So it's a very, very clever basic financial regulation method. So the more people that mine it, the stronger, faster, more secure the network becomes, and the harder it is to get the coins, which subsequently in turn increases the value of the coins, which people either already have or the future coins that are generated. So that logic applies to all the other coins as well.
So the people who mine Bitcoin, why wouldn't they be mining altcoins, or are they? Or
genuinely lack of education. So because most people just go, oh yeah, Bitcoin, let's do that. And it's quite easy. You can buy a machine from China. Bitmain is a big company out there that is the biggest provider of these ASIC equipment. You buy them, internet socket, plug socket, turn them in, plug them in, off you go. Again, typically, historically speaking, mining all these other coins, because is a little bit more technical because there's different ways you can do things. The average person wasn't capable of building a machine like this, so they just bought the off-the-shelf stuff and chased Bitcoin. However, that's now where our business is as a model for 3 years plus now. We've basically got the education level and the practical simplicity of having the machine that mines everything rather than Bitcoin. Plug it in, turn it on and off you go. So it was a lot of technical restrictions, a lot of educational restrictions. So let's get it straight. Anyone doing this is doing it to make money, and they want to make as much money as possible. I mean, that's the top and bottom of it. That said, therefore then, if there's all these different tokens and coins, if they're all immediately interchangeable with each other, so, one Ethereum is going to be worth so many Bitcoin or vice versa or whatever. All these coins you can trade similarly to how you can trade pounds, dollars, euros, yen, all immediately interchangeable on a global multi-billion-dollar market. Therefore, it's my interest to help clients earn as much pounds and pence as possible per day. So why mine $2 a day of Bitcoin if you can mine $10 a day of another coin? Even if you don't really like this other smaller coin, if you don't believe in it, you don't care about it, whatever, simply take that $10 and trade it and buy Bitcoin. So you always end up in a much better position, notwithstanding all the technical aspects and the physical difference in equipment, of course, that we've quickly discussed. So ultimately, it's an ROI-focused business. We're somewhat coin agnostic.
Yeah, how does that ROI work? So how do you decide what's a profitable coin, and I suppose get where we're sort of moving into income projections here, and how that side of things work?
So, I mean, ultimately, the business, as I said, is set up in a very simple way. We kind of cover three aspects. So one is education. The vast majority of our clients are not crypto experts, are new to this. We have dairy farmers that don't know how to use smartphones, taking advantage of this in some pretty large numbers. So we educate people as to what blockchain is, how it works, what the opportunity is, and why you'd want to get involved. The second thing, of course, is the build and the manufacture of this equipment you can see behind me. So we hand build everything here in Manchester by my own tech team. They're all, patent-tested engineers. Everything's done as it is, the way it should be, built by hand properly in the UK. So we only provide the Rolls-Royce of equipment. We don't mess about with cheaper units. We only deal with the top-end stuff, because at the top end, you have the most powerful equipment. You earn the most coins the fastest. You have the best warranties on the equipment. And of course, it's the most powerful and flexible for new projects and new things that will come out, and that the equipment will last you a much longer period of time. On the back end, then, on the third aspect, so we educate you, we provide you with the best kit possible, and then on the back end, what we do is simply, we don't expect you to be a crypto god just because you bought some kit from a bloke on the internet. What we do is we work with you consistently to ensure that you're consistently updated from our team with advice and guidance upon which coin to mine and why to mine it. So, for example, we might say the market is telling us this, and therefore this coin is now the best coin to mine, and maybe that might be the same for a couple of months. And then if something changes in the market, we might communicate with everyone, hey, actually this one's a bit more profitable to mine right now too. So depending on the amount of equipment that you have, obviously that somewhat changes our advice, because if you have one machine, you might just go after the best coin of the day. If you have 10, 20 machines, you might have a few doing this, a few doing that, a few doing something else, which again, we can provide all the advice for. But all of the guidance, all of the communication, all of the support is entirely free. There's no ongoing fees, there's no costs. That's not the way the business works. We don't take any cuts, any commissions. It's you buy the machine, you own the machine, you have full control of the machine. We teach you how to use it, which is nothing more than glorified copying and pasting. And ultimately, we then assist in the background for technical support, remote support, and advice moving forward to make sure that you are always on track. Because I don't know what the best coin to mine is going to be in 6 months' time, but I do know that you're going to have the right tools for the job.
Yeah. Okay. No, really interesting. So you buy these rigs. In terms of people understanding a bit more about these rigs, I think it's sort of the difference between the ASICs and the GPUs. Is that?
Yeah. I mean, we've loosely covered that. So an ASIC machine, an application-specific integrated chip, is basically what you mine Bitcoin on. Yeah. So the long and short of it is someone has designed a special computer chip that's dumb. It doesn't do anything else than just mine Bitcoin. It's not a computer. You can't plug a mouse monitor and keyboard into it. All it's done from the day it was made is mine Bitcoin. So because it's just a special chip, it's very easy to make a better chip, a better chip, a better chip, a better chip. So to put this in some type of relevance for people, 2.5, 3 years ago, the best Bitcoin miner was a machine called the Bitmain S9. That was the big miner that the vast majority of people had at that point in time. That was 13 terahash. That was its speed measurement. Today, the best miner, just 2.5, 3 years later now, is the S19 Pro, which is 130 terahash. So you're looking at roughly 1,000% hardware increase in a 3-year period.
Yeah.
Now, that's pretty unsustainable. And this is, again, where the majority of misconceptions come from about electric cost. Everyone goes, oh, you can't mine profitably in the UK, the electric's too much. And electric only becomes a concern when you have new machines being made every 5 seconds of the day, where the new machine's 2 or 3 times more powerful than the last one, so the only variable you can control is the cost of electric. The vast majority of my clients, although we are very big in the renewable energy sector, pull from the grid, normal domestic rates, 13, 14 pence a kilowatt, and still make great profits because the technology doesn't move on in the same manner. And of course, you're mining lots of different coins, so not everyone is competing at the same thing at the same time. So to put this in perspective on the flip side, so that's the ASIC stuff that just mines one coin. Our machines are what are called GPU machines, graphics processing units, or graphics cards. So for those of you that are maybe a bit more technical, you have a graphics card inside a normal computer, and that's what you use to play your games on, or to do video editing, or to do lots of graphically related tasks. So as you can see, we strapped 6 of them together. So we put 6 of the world's most powerful cards together, and each one of those graphics cards is effectively just a little mini supercomputer. They're very, very good at crunching numbers. So inside one of those devices, it has a little chip and a memory module, and it's just very, very good at crunching numbers. So the best bit about that is the companies that manufacture these cards is a big multi-global billion-dollar company called NVIDIA. The main manufactured purpose of these cards is not for crypto. The main manufactured purpose of these is for playing games on your computer, or for video editing, or for commercial artificial intelligence and deep learning and all kind of very heavy data related tasks. So even if, God forbid, you bought this equipment and in a year's time you wanted to sell it, and the Bitcoin price had gone to 0, it isn't massively going to affect the asset value of each individual one of these cards. You could unscrew one of those cards, plug it in the computer that you're watching this on, provided it's a desktop on a laptop, of course, and it would massively increase the performance of your system. So therefore, NVIDIA isn't in the business of self-cannibalizing its own market. So typically the life cycle for each of these cards is 2.5 to 3 years before a new device comes out. And the performance increase from generation to generation is somewhere around 15 to 20%. It's nothing like the 1,000% increase that we retrospectively get in the ASIC world, because they're built for the sole purpose of earning more Bitcoin. So that's again why we don't mine Bitcoin, because it's kind of a never-ending cycle of chasing your tail. Whereas with the GPU world, it's a little bit more Swiss Army knife, a little bit more long-term. So we expect our equipment to be happily ticking away for 5 years plus. For example, we've got our first generation of equipment now. Obviously we've now got our second generation of equipment. And the first generation of equipment is still making clients great profit every day from 3.5 years back.
Yeah, right. And that's going to be an investor might look at, what's the risk of I buy this box and the depreciation in value, and that's quite important to understand that, that you have something. Well, there's multi-use to these cards, which is nice. They can be sold for different things. So you're going to retain quite a bit of this value going forward.
So as, of course, a business investor, a property person, or someone that wants to get involved in this, of course, you've got that headline figure of the 10,000 plus VAT. You can get the VAT back. And then, of course, the capital investment allowance of 19% ex-VAT brings that to 8,100. Of course, bearing in mind with the £7,100 that was generated on a single unit, as Chris has alluded to, in a pretty poor year, minus your electric costs of 1,200 quid with your £5,900 net, that brings you to a grand total of 72% return in a 12-month period, which I appreciate compared to property of, maybe 8 to 12% a year as a standard is pretty ridiculous. Hence why there's such an attraction to this. Now, very honestly, we can't make any guarantees about future earnings or income. This isn't the way it works, because the amount of coins that you earn, when you choose to sell those coins, what they're worth in the future, they're entire market variable conditions that I cannot guarantee, nor can I stand by. However, the numbers are statistically so much above standard investment baselines, even in a smaller period of time, such as that first 12 months, that this becomes something very, very attractive that people are considering at some really great scales. So we do always say to people, again, the same as in property, only spend money that you don't need for the next few period of years. We do advise that this is a 3 to 5 year play, because of course there's different ways that you can utilize these coins. So you can earn these coins every single day. If you wanted to sell them into cash every single day, you absolutely could. That wouldn't be my advice. Generally speaking, you want to keep the coins and they accelerate in the market over time. So that last year of the £7,100 earning, for example, what that might be worth in next year or the year after, of course, is going to be completely different depending on the value of those coins. Historically speaking, again, everyone always gets a knickers and a twist about the price of Bitcoin being so volatile. But here we are now back at close to all-time high prices. Forget the all-time high prices, forget the yearly highs. Just look at a graph, it's in our documentation, that illustrates the yearly low price of Bitcoin. And it's increased every single year for 10 years. And it's the highest performing asset class on earth over the last 10-year period. And fundamentally, if you're taking a multi-year play, as Bitcoin increases in value, the smaller coins also follow suit, generally by a larger percentage multiplier, because of course they have a lower market cap. So it's a case of all boats rise with the tide in the cryptocurrency sector, and subsequently the coins that you have are typically worth much more in X period of time down the line. That said, they're still worth a bloody nice fortune if you were to sell the coins every single day.
Yeah, and I think that, and in the brochure that anyone wants to read, I think that yearly low is a nice way of demonstrating conservative income, because as you're right, property investors who are used to much lower returns, when they hit 72%,
yeah, it's ridiculous. Absolutely,
they're going to go. This, I think the problem with it is, we kind of position this as like a virtual tenant. You can have a box in a room that say you've had a your tenants left, or they're not paying rent at the moment, whatever the case may be. The difficulty is with a normal tenant, you can go on the internet, what the rent is for your market. That income number, much like a property price, is you can find that out pretty easily per location. And I think what's important to understand, and we've talked about this at length anyway, which is trying to understand the income. It's quite difficult. It's not the same way that you can come up with the metric of, it's going to be that income. So that's one thing that I would say to property investors, that you're not going to find a nice, easy way to find out what that number is. But I think the yearly lows on Bitcoin, and the fact that the income projections are based on last year, which was a bad year. This year, for example, would have been a good year, I imagine, for a lot of people. Yeah,
certainly in the next month or two when the market sorts itself out. Yeah, and then obviously what happens is it has a multiplier effect. So now the market's much higher. So what does that do? It means today, right now, my machines are earning more than they were 3 months ago, because the value of the coins is now higher, and I'm earning those coins, the value's increased. But more importantly, it means everything I've mined in the past 2 or 3 years has now multiplied in value by 200-300%.
If you'd held
those coins, of course. Now, the other side of the cake to this is, let's just say you're playing devil's advocate and you don't care about the price of coins, you're not bothered about the future of the market, you just want the most baseline stable investment option you could, and you just wanted to dispose of the coins at whatever regular period. If you just had a machine and you were mining, and you were earning 10 quid a day on a machine, then ultimately, on average, it works out much more than that. It was over double that last year, but taking some conservative numbers, what that leaves you with is, by the time you've factored in your depreciations, your tax, and your asset value of the equipment, and yada yada, even if the market remains stagnant and doesn't increase for the next period of time, you're still looking at ROI numbers between 15 and 25% a year before anything's even changed value. So when you look at it in those type of terms, it does become, quite attractive, even at its rawest form.
Yeah, indeed. No, that's great. And I think one piece that I would add to this from a finance point of view that's important for investors to understand is that these boxes are financeable. So you can get up to, I would say, anywhere between 90 and 100% financing. 100% financing is possible. So that lowers the entry level for what you can get involved in terms of buying the boxes. Although what that then means is that your net income is going to drop. If you're going to hold those coins and you're paying off finance over typically a 3 to 5 year period, your monthly repayment per box is the numbers we've done are somewhere between 250 and 470 per month. So, and if we work off the 7,200 per year income, you're making 100 to 200 quid a box as a kind of worst case scenario. So there's different ways. Different investors have different views to whether they want to leverage up and what that benefit is. And again, as you've rightly said, the income is variable because your strategy might be to hold and sell them at a later date. You might be mining and selling. So it's very difficult to come up with that projection. But we've got a lot of those projections in those brochures that we can send. And, it's about trying to compare it to property, but also to come up with what isn't similar and what you've really got to think about that's different. If you're coming into this thinking the income's going to look the same as how you would forecast it for property, it's not. So those are some of the differences in that. But
So I mean, just to give a real world example to that, if you take a finger in the air, on average, a machine might have done a tenner a day. Some days it's less than that, some days it's more than that. That's a really good finger in the air. But say, for example, Ethereum, which is a coin many people listening to this will have heard of, it's the second biggest crypto coin that there is. We typically haven't mined a lot of that over the past 2.5 years. It's not been the most profitable to mine. Other coins have been. And again, the same reasons apply. Why mine $2 of Ethereum if I can mine $10 of something else, right? So we haven't really mined it that much. However, about 2 months ago, something changed in the way that Ethereum was doing something in the network that all of a sudden made it very profitable to mine. So our machines went from earning effectively £10 a day to upwards of some days actually close to 25 to 30. But of course, you're getting paid in Ethereum. But this was when Ethereum was $300 a coin. So we were earning effectively 25, 30 quid a day for that period of time, which was fantastic. We just thought, great, we'll bag that, increases the yearly average, fantastic. But now, unbeknown to us, 6 weeks later, the price of Ethereum is now $600 a coin. So what we thought was 25 quid a day was now, even within a 2 months retrospective period of time, providing you kept those coins, was over £50 a day per unit. And when you start having those opportunities, of course, they usually play out over the long term, but that's more of something we've experienced in the very short term example, just to demonstrate how quickly the numbers can multiply. Because that's one thing to understand for people maybe watching this that don't quite get how crypto markets work. The volatility is almost the beauty. Whereas you might be used to a linear progression of the value of your property over a 10-year period. There's no way on God's green earth the property is going to double in value in a 12-month period. That happens in cryptocurrencies every year. I mean, it's just such a high growth sector. And again, you can look back at the 10-year history of these coins to see how that is, why that is, and hopefully the explanations I've given you at the beginning of this video will allude to why there is so much value in this, the same way that Facebook, Amazon or Tesla stocks have grown because of the unique business offering that they offer.
Yeah, and very much like shares, if you were mining a share, Google shares or whatever, Amazon,
right, yeah,
you could either liquidate that the same day or you could
of
wait.
Course, same principle. So I mean, in really, really, really simple terms, imagine buying a machine that prints the stock of your choice.
Yeah.
That's kind of a good way to summarize it in real terms.
Very good. Okay, well, look, I just a little bit of Q&A. We've actually covered a few of these, so I'll just sort of wrap up a little bit of that and some questions that maybe property investors might ask you, which, we've looked at, okay, what am I actually getting for my investment? You're getting a box that you keep, and then further down the line, it's going to retain some sort of value. So we've kind of covered the risk that, the box is going to be worthless. What we're saying is it's not going to be worthless. It will retain an awful lot of its value because of its multi-use case and the upmarket nature of it. So that's sort of one part. You've covered a bit in, say, an investor might say due diligence. They'd like, maybe this is the first time they've come across you.
Yep.
You've been going for 3 years. I think the limited company isn't the Easy Crypto Hunter. It's Eagle Aquila.
Yeah, Eagle Aquila Limited. So just to avoid confusion on those doing due diligence, I own a multitude of companies. I do own a company called Easy Crypto Hunter Limited. We don't use that for trading. That's just for namesake purposes, so someone else doesn't impersonate us, as it were. But the registered trade name that the invoices come from and the main facilitation of the business is a company called Eagle Aquila Limited. Of course, you can find all that record on the company's house quite easily.
Grand. And if worst case scenario is, God forbid, you're hit by a bus or the business folds for some reason, you've got your box. So that's number one. That's something that you can use. You guys obviously provide this software and technical support. How would...
It's all independent, yeah, so that's the beauty of it. So let's play absolute devil's advocate. So let's say you buy 100 grand of stuff off me today and I disappear and do a runner tomorrow, never to be seen again. Well, where does that leave you? Well, one, we educate you on how to use this software. So the controller software that controls the unit is a third-party software. So that's not affected by us anyway, so that's fine. So we will teach you how to use that. It's glorified copying and pasting. It is not my company that pays you. It is the blockchain companies, these multi-billion-dollar entities that pay you mathematically. It's not like, oh, you can't get paid. It's mathematically bound. You solve so many calculations for them. You update so many stamps on the blockchain. You get paid directly proportionally to that. So it's not something that, they either need you or they don't. It's just that's the way it works. Anyone can access it and you get paid. So if I was to get hit by a bus or disappear, you have full control of your equipment. You have all the boxes, you have all the original manufacturer's warranties, you have use and understanding of this software, how to control them. So ultimately, if you bought stuff and you never spoke to us again, what you would miss out on, of course, is the kind of advice, support and guidance on an ongoing basis. But quite frankly, if you'd spent a good chunk of change on equipment, I'm sure you'd do your due diligence in other places to find out the best use of your equipment moving forward as the time went forward. So, we don't take any ongoing fees. We don't take any service charges. We don't take any commissions. My business is based, quite frankly, on providing good service, getting good returns for people. And obviously, as the market continues to grow, we have a whole plethora of clients now who bought a good chunk of equipment many years ago and continue to come back and purchase new equipment every month with the recycled profits from their old equipment. And that just continues to expand their infrastructure. So people can take it how they want, but we have offices here in Manchester that anyone watching this is more than welcome to be wanting to come and see us, meet myself, meet the team, see how stuff's built. And we just like to, offer that digital tangibility, that digital crypto or this online internet money that seems a bit scary. We like to give a physicality to that kind of gives people that bit of more confidence.
Yeah, no, that's grand. One question I've had before, if someone's got 10, 12 grand and they've got the option of investing direct, they could go and buy a Bitcoin or half a Bitcoin as it probably is now, or they could go and do mining. How do you look at what you provide compared to if someone goes and invests?
Yeah, absolutely.
Direct, and I don't
so why bother buying machines versus just buying the coins themselves?
Yeah.
Right, perfectly fair question. So it ultimately comes down to a myriad of factors. So one of them, tax. So if you have 12 grand cash, buying a machine is going to get you further in tax efficiencies than just spending on the asset themselves. So you can't get the VAT, the capital back, the R&D stuff, all that type of stuff, whatever. So your money goes further. Then, of course, you retain the physical asset of the equipment, so your exposure is never zero. If you spend 10 grand on a coin and it goes to zero the next day, which is unlikely, but certainly possible, you have 100% exposure. So when it comes down to sensible risks and investments for longer periods of time, ultimately as investors, it's all about what is the least risky thing which gives us the biggest upside. So when you buy a certain coin, you're just hoping that single individual coin or project does well in the future. Whereas the best way that we explain our machines is rather than kind of buying one coin or, as it were, backing one horse, buying a machine which is the underpinning infrastructure that powers the whole ecosystem means we can mine this coin, this coin, this coin, this coin, and new coins that yet don't even exist in the future. So it's a little bit more like buying the whole race course. I don't know which horse is going to win, but I know someone is, and we can take financial advantage of that for a long time to come. So it's really a case of, Can you make more money just buying the coin and hoping it doubles overnight? Yes, categorically, absolutely you can. Is it inherently more risky? You bet yourself. And that's why you're property investors and you're not professional gamblers. It's a different thing. So it really comes down to cryptocurrency mining is a longer term, more strategic, more tax efficient methodology of taking a longer term approach to invest in this market in a physically, tangibly backed way, where you have support of a company that's been doing this professionally for a long time.
Yeah, very good. Well, I think that's a splendid place to end. Thank you very much for your time. I've really appreciated that. For investors, next actions. I hope that's at least piqued your interest, and you're starting to think about how property and digitisation is coming together. If you want to speak to either of us, I will put some details on this. This will be a mailer that you will have received. You'll have all of our details on that. And if we get demand for a big Q&A, then we might do a live Q&A in the future. If you've got separate questions you want to fire off, then we've done this with some investors already. So if that's something that you want to do, then we're both able to do that. So look, once again, Josh, really appreciate your time. Thanks a lot.
No, it's been a pleasure. No, thanks for sorting it out, Chris. And obviously, again, if anyone does have any questions, get in touch. Those will be more than happy to help. There's no such thing as a silly question. I know it all sounds a little bit scary in the beginning, but we just try and make it as simple as we can for people.
Brilliant. Much appreciated. Thanks a lot, Josh.
No problem. Thanks so much, guys. Take care. Bye.
Cheers. Bye-bye.